Novak was in the other room talking about all the updates that he did and all the enhancements that he's doing, and it's all based on all everybody's feedback, and it's pretty cool. And he's like, the only thing that we haven't programmed is the chili dog. I was like, man, Ron, you're famous. I was laughing about that. Sounds good, Wayne. We'll go through your stuff after. Have fun in yoga. Great trading, by the way, earlier. We'll talk about it as a classroom, though, for sure. Let me know when you get back so that you can be there to get your praise and admiration. All right, guys. What is today? You know, today is Tuesday, September 16th. Just a little proud daddy moment. It's my oldest son's birthday, 27. Whew. I don't know how that happened. I'm only 29, but it worked out. Yeah, nickel doesn't seem like enough anymore. You know what? We'll let the lawyers hash it out. I refuse to negotiate with trading terrorists. News today. I wasn't watching, but at 8:30 a.m. there was high impact news. Victor put a little commentary on it in there. I'll admit it right from the get-go, guys. I'm pretty ignorant regarding news releases and what they mean and what anticipated reactions are. And I don't know if that's a good thing or a bad thing, but I don't know what core retail sales mean in the big picture. I mean, I know what a retail sale is, but what I do know, and I think what's so important, guys, is that anytime there is a news release, and I'll give you guys the link to the news source here, anytime there's a high impact news release, it has the ability, the potential, it could upset the flow of the market. It could make it too fast to read your indicators to trade. It could reverse the market violently out of the middle of nowhere. So this is my first stop every morning, is stopping off and making sure that there isn't news. Hey, look at that. That's the S&P. We're going to discuss two platforms this morning. Same as we do every morning, guys. We're going to talk about NinjaTrader and those of you that are on that platform using dynamic Renko bars. And we're going to talk about TradingView and those of you that are on that platform using the minute bars. They are different. And this is what I really want to stress in the beginning. If you are coming from Renko bars over to minute bars, you're going to be tempted to bring your rules with you. And I need you to leave them at the door because of the bar structure, there is a different read. And I'm going to give you guys the reads on both. But what we're going to do this morning, and I made this inclusive of both platforms, guys. We're going to learn to read charts this morning. That's going to be the goal, is to be able to read a chart, to be able to look at a chart, and to be able to say to yourself, I have the advantages that I need in place to feel comfortable taking a trade. Let me get my laser pointer on there. And that's really what day trading is about, guys. Day trading is about probabilities. Day trading isn't about always winning. Day trading is about winning more than you lose. Day trading is about putting more money into the account than you let fall out of the account. And one of the easiest ways to do that is with high probability trend trades. High probability trades. Trades where each indicator on every chart agrees with the rules for the trades. So my classroom is designed to bring you into the fold of day trading with the highest chance of success, giving you plans that optimize your chances of success, giving you rules that teach you to read your indicators so that you can go off one day and build your own trading plan. My classroom feels restrictive to somebody that wants to be busy all the time. My classroom feels like I'm holding back secrets from you, but I'm not. I'm going to give you guys everything that you need to be successful with the software as a brand new user. From that foundation that we build together, you will find more. So we're going to talk about high probability trades because these are going to teach you to read your charts. Chart reading is about 90% of your day. 90% of your day is spent doing nothing. Well, not doing nothing. You'll be looking for advantages. We're going to talk about those advantages. Actual trading, like being in the market, managing your trades, is about 10% of your day, if not less. Over the course of a 6-hour day, maybe 36 minutes total spent actually working. That's not a bad gig. A lot of us would have loved that in our professional careers. But when you learn to read your charts, and when you focus on chart reading before you focus on the money, when you focus on the advantages before you focus on the profits, guys, what you're going to realize is that you will be able to determine where the market is likely to continue. This becomes an entry spot for your trend trades, for your trades. You'll understand where the market is likely to go. This is going to help you with profit targets. And you'll also understand where the market is likely to stop. And not only will this help you with profit targets, this will also keep you firmly embedded in the 90%, not taking trades into areas that could stop the market. You'll be able to identify all of these, and with a little bit of study, you'll be able to identify these in a matter of seconds. We're going to talk about NinjaTrader first, guys, and this is the recipe for the high probability trend trade. I'm going to provide you a plan with a checklist to keep you focused on these good things. It's only 3 rules. I firmly believe that the less moving parts you have as a new user, the more likely you are to find success. So this is only 3 rules. And when the rule is true, when you have strong trigger lines, you'll have the advantage of momentum. And when you have no terminations, none of those likely to stop the market areas, you'll have a clear path. And then we will define entry, having the advantage of a market being able to identify right where it's most likely to continue with the trend. This is the best of the best. And it's going to teach you to recognize, first and foremost, momentum and path. And what you will find is that when you understand momentum and path, when you can identify it quickly, when you can recognize it, you'll find a way to capitalize outside of the high probability trend trades. You'll find more ways to make money. But if you don't learn this very core foundation, you're probably going to struggle. So just a little ominous warning there. Third rule is just a trend trade entry. You'll use it in high probability trend trades and medium probability trend trades. These 3 rules only take 2 charts. That's it. There's a large chart and a small chart. For those of you that have to have numbers associated with it, your large chart on crude oil, S&P, this is a 13.2 chart. That is just a reflection of the bar structure. Your small chart is a 5-1 chart. And again, that's just bar structure. It's a smaller, faster chart. Your large chart is very slow in the grand scheme of things. It's a very broad stroke of a brush. And we'll use it to show really the overall opinion of the market, to give you the big picture, if you will. And it only takes the most current bar on that large chart to define the direction of the market, making sure that you're trading with the trend because the trend is your friend, and all of those cliches, to define the momentum in the market. Rule number 1, making sure that you have that advantage on your side. And then finally, defining the areas, making sure that you're not trading into an area that has the potential to stop the market. Now, as a brand new user, rules 1 and 2 must be met here. This is your safety, your little safety net. This is keeping you focused on a market where you can identify the direction it's going. You have no misunderstandings about it going that way quickly, and there is nothing in the way to stop that market. It's the best of the best. When the rules are met on this one bar, the most current bar, the first bar, guys, you're going to go see the inner workings of that bar. This is where your entry comes in. This is where the precision falls into place. This small chart refines the big picture. It's going to pinpoint your entry with a very clear set of rules, and by using the smaller, faster chart, you will be able to reduce risk. You will have larger profit potential, more room to targets. It's only 2 charts, guys. It's only 3 rules. And we use the 2 charts because everybody needs the reminder that they're not in charge. Everybody needs to be told during the day, you don't control the market. The market's not worried about your 2 contracts or your 4 contracts. Guys, you will never create a trend on your own. You will never force momentum into play on your own. You will never make a Fibonacci area based on your movement. The large crowd does that. And the large crowd typically wins, guys. Fighting the large crowd is a recipe for a financial suicide. So we go with the flow. Your small chart I want you to think of these guys and gals as the fighters. These are the people that push against everything the big crowd wants. And they create what we call a retracement. Now, a retracement is not a reversal in the market. A retracement is a small push counter to everything the big picture says. So when the market is trending up, a retracement is going down. And when the market is going down, a retracement is going up. We're going to use this retracement created by the small crowd. And rule number 3 pinpoints where their failure is most imminent, where they're most likely to lose their fight against the big crowd. This is where the market is most likely to continue with everything the large crowd wants. So it's only 2 charts. You'll never be in charge. But if you think about it this way, it's just a metaphor. Large charts, a large crowd. They create the trends, they establish the momentum, they react at the areas. It makes it easier to understand the rules. And if you remember that the small crowd, we rely on their fight to give us the best entry, what it does is it takes you out of the equation and just lets you do what they tell you to do. We're going to go through and we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade on both platforms. Both platforms use 2 charts. Both platforms have 3 rules, guys. It's just a different way to look at it. Everybody in the room has the ability to simulate. Now, we talked about this yesterday. Posting in the room. Posting in the room is the first step in becoming a confident trader. When you post in my room, what you're doing is you're saying, Mark, here's what I did. Let me describe it to you on the chart through annotations. Did I do it right? Did I read it right? Did I enter right? Did I manage it right? Mark, was there something that you see that I could have done better? If there is, my promise is I'll share it. I don't hold back from you guys. If I see a challenge on your chart, I will address it. It doesn't matter if I approve or not, it's your trade. But a lot of times, I want to make sure that you guys understand if you're trading into trouble. I want to make sure you understand if you actually fought everything and got lucky. So post in the room, guys. Get that private session. After 2 or 3 posts, you'll realize that I'm pretty warm and fuzzy. Definitely iron fist and a velvet glove kind of guys. And I won't beat you up. I'm looking to celebrate victories, but I'm also looking to correct things that are going to pull money out of your account. The second thing is simplify. Keep it easy. It only takes 3 rules and 2 charts. Human nature tries to create more. One of my favorite phone calls was the call that said, hey Mark, you can't make money with 3 rules on 2 charts. You need more indicators, you need more rules, you need more time frames. It just can't be done. Well, I wholeheartedly disagree. I'll teach you how to test this plan. If you don't think it can be done, do the work to prove me wrong, guys. Everybody that's done that much work is still with me today. So keep it simple, keep it focused. But you've got to learn the looks that you're going to commit to, guys. And that's the second thing. The spreadsheet that I give you every morning, I'm going to give them to you right now. I'm also going to give you the plans. I'm going to go ahead and do a little knowledge drop in the room. I'm going to give you plans for both. I'm going to give you spreadsheets for both, guys. And Ron says it works, period. Amen. I don't disagree at all. I wouldn't be sitting here teaching this if I didn't believe in it. So guys, the first one, where's my mouse? Why is my mouse invisible? Okay, hold on one second. We're struggling here. My mouse won't work on the spreadsheets. There it is. The first spreadsheet is the NinjaTrader spreadsheet. So guys, if you're with me in NinjaTrader, one of the things that I'm going to encourage you to do, and I'm going to bring this back, and I'll give you this document. It's only 3 rules. And the first 2 are the most important for the overall view. Guys, take a lot of pictures. Take pictures of strong triggers, weak triggers, clear path, termination. Go through and really snap a lot of photos. And then take those photos and take pictures of strong triggers so you always know what it looks like. And take pictures of weak triggers so you know when to sit on your hands and do nothing. Rinse and repeat as you go through. So this is already started for you. I would encourage NinjaTrader users to go through and do this. You will be absolutely floored at how effective you become in reading your indicators. There's over 500 pictures of Nexgen users using the pattern, momentum, path, and entry to find success with the software. You guys are brilliant. I steal them and I put them in the spreadsheet. There's the entry sequence, step by step, so that you can pinpoint precisely where the market is most likely to continue. Ideas on management, the first 4, this is the management from the very simple plan that I just gave you in the room, the KISS plan, the Keep It Simple Sunshine plan. And it is dedicated to knowing where to put stops and understanding how to get paid. There's a lot more ideas on management, patterns that repeat themselves. And guys, there's a place for you to build your plan. So when you post in my room, if you post the perfect trade, the perfect entry, everything's beautiful, the pattern is solid, you're going to get that praise. We're going to virtually high five. You should take that picture, drop it into your trade setup looks, guys, and now you know exactly what you're looking for each and every day. You can come back. Each spreadsheet will have a tracking sheet where you can take the pictures. You can talk about your advantages. But guys, this is what sets Nexgen apart. This is the feedback. Every day, you'll get feedback on everything that you post in this room. We will talk about your chart reads, making sure that you do in fact understand momentum, path, and entry. And the only way I know what you're thinking is if you tell me on a chart, so don't hold back on your annotations. We'll talk about your reads, we'll talk about your entries, we'll talk about your exits. If there is anything that I can offer you so that you can do it better, I'll give it to you. When everything is perfect, your feedback will be, that's perfect, put it in the plan. When it's not perfect, maybe you traded into a termination condition, maybe you jumped in early, you'll get that feedback as well. So I'm going to encourage everybody in this room. Did anyone do this morning? Did you go back to yesterday's trades and say what worked? Did you go back and say what didn't work? What am I focused on today to continue that success? What am I focused on today to avoid the challenges? And guys, if you do this every morning, it takes you about 2 or 3 minutes. It will prepare you for the day and it will accelerate the learning. And the feedback in the room is what saved me as a brand new user. My problem, this is the Mark Novak story, is I traded into termination conditions, guys, all the time. I hoped areas would break. I used words like it should break, it has to break. And the reality is terminations don't. And it was draining my account. And it wasn't until I posted in the room that I got the feedback. And then once I got the feedback and put it in my spreadsheet, John Novak taught me how to avoid it. And that's what I'll do for you guys. So learn your rules. Make the rules your Bible. Make it your cast in concrete, will not deviate as a brand new user because my rules optimize my chances of success. Practice, practice, practice. There's no set time you should be on simulator. You should be on simulator until you can always take the correct trades. Practicing the wrong trades, getting lucky typically runs out when you go live. Luck runs out. Keep it very, very simple. Both trading plans that I gave you have 2 trades. That's it. Keep it focused. Learn how to make money easy with the understanding that there's a lot of opportunity out there. And then guys, I'm going to expand on this one because I haven't done this a lot. After class, before the next day, use Market Replay. Whether you are TradingView or NinjaTrader, use Market Replay. Double your reps. Fix any mistakes that you made. Maybe you entered early. Maybe you traded into a termination condition. Don't do it. And don't skip the trades that fit the rules. And if you post in the room and tell me, hey Mark, I skipped this one because, and you should have been in it, you'll know. Take pictures of the correct trades. Bring me your Market Replay pictures, guys. Get feedback on all of that. It does not have to be a live market to get feedback. Hell, it doesn't even have to be a trade. You could just take a picture of your screen and say, look at this. These are strong triggers and there's a clear path. I didn't see an entry, but am I reading it right? And the answer is going to be either yes or no. And guys, repeat the process every day until you always take the correct trades. And once you guarantee yourself you can win, and if you're always taking the correct trades, you are guaranteeing yourself you can win. That's when you go live. That's when you go to the prop firm. That's when you've been so focused on the process that the money becomes a byproduct. So this hasn't changed in 24 years that Nexgen's had a live classroom. Embrace it. Shorten your learning curve. We're going to get into the indicators for NinjaTrader. Both charts have areas. Areas have names. That's all you need to know. You don't need to know how they're created. There are divergence highs and lows, which mean that there was a loss of momentum at a pivot. You'll see magenta from a high, cyan from a low. You'll see red Fibonacci resistance in an uptrend. This is an area that could stop the market, create a bounce, or reverse it completely. You'll see Fibonacci support, the blue line, in a downtrend. This is an area that could, may, might, has the potential to stop the market, create a bounce, or a complete reversal. You'll see yellow 1-to-1s. When the market is trending up, it's the same thing as a red fib. When the market is trending down, it behaves exactly like a blue fib. It's a fib in the moment, dependent on direction. And you will see a mid-band scrolling through the middle, just a moving average. And then both charts will have triggers. Triggers are moving averages. You don't need to know that. What you do need to know on NinjaTrader is that these are small triggers. Small triggers are faster. You're going to see them on the small and large. These are large triggers. They're slower. You'll see them on the small and large. When they're green, they're going up. When they're red, they're going down. You will use triggers to define momentum on the large chart for rule number 1. You'll use trigger lines to define termination conditions on the large chart for rule number 2. And you will use these large triggers to define the perfect entry on your smaller, faster chart for rule number 3. So triggers will tell the story in 99% of the things you do with the software. So for the high probability trend trade, guys, we're going to break it down. I would love it if you interrupted me if you have a question. You can't ask too many questions. You can't post too many pictures. Large chart, big chart, slow chart has to have strong trigger lines because I refuse to trade without the advantage of momentum. So when I look at a large chart, I'm going to notice that the background color behind the first bar is either red or green, guys. Green is up, red is down. So you have defined the direction that you're looking to trade and look for rules to be met. It's really pretty simple, up or down. If you're colorblind, let me know. I'll teach you a trick to circumvent needing the colors. In an uptrend or in a downtrend, the only way I could ever have rule number 1 met is if all of the colors match, if everything is green or everything is red. So that's a little safeguard for the brand new user to not get caught in a little bit of a transition when you don't have momentum. In an uptrend, small triggers must be up and above the large triggers. Large triggers are widening, small triggers are above. It's the space that's created between the small and large that identifies strong triggers. So in a downtrend, large are widening, smalls are down and below, and it's the space created that makes them strong triggers. And when I have strong triggers, the odds are favorable for the market to continue up or down. The odds are favorable for the trend to push in the direction it's already pushing. The odds are favorable, guys. Odds favorable momentum. That should like get you excited. When I have strong triggers, the odds are favorable. That market's going to be hard to stop. But when the small triggers work their way inside of the large triggers, when that advantage goes away, it looks like scissors, when the scissors close, we call that weakness. Now, if you're a word geek like me, weakness is the opposite of strength. Strong is my advantage, weakness is where my advantage goes away. When I have strength, the odds are favorable. That makes me feel good. When I have weakness, anything can happen up or down. This is where you see the market kind of turn from the middle of nowhere. This is when Fibonacci areas are most likely to hold and stop forward progress. So let's take a quick look. We'll use the S&P as an example. Does everybody see the separation between the small and the large? That is your momentum. And that momentum broke a key area. And that momentum pushed the market up. And then that momentum started to go away, and it was weakness where the market reversed right at a key area. And then it creates momentum, and sure enough, momentum pushes down, and momentum is taking us to the next areas. And guys, it really is that black or white. It's either strong or it's weak. You guys good with that? That's rule number 1. Typically the easiest lesson. If you are one of my TradingView users, you will need to know this strong trigger look for your small chart. So pay attention. Once I have momentum, once the market is likely to continue in the direction of the trend, guys, I need to make sure that there's nothing in the way. No termination conditions, no areas with the potential to stop the market. And when there are none, I'll have room to my profit targets. That's important. I'm here to get paid. I'm going to call it a clear path because I don't want to type that much. So with momentum, we will couple a clear path. Now, termination conditions are horizontal lines on the large chart, areas on the large chart, Fibonacci support, resistance, yellow 1-to-1s, divergence highs, divergence lows, guys. These are where the people in charge, the large crowd, are most likely to make decisions. These are where the buyers are most likely to buy, where the sellers are most likely to sell, where profits are most likely to be taken, and where fights are most likely to occur, fights that you don't have to be a part of. So if you remember that, large crowd makes decisions at these key areas that we know about long before the market gets to them, it makes understanding the termination condition definition pretty easy. Price must reach the area. Price is the big crowd going up. Price is the big crowd going down. And when price gets there, when the large crowd reaches this yellow 1-to-1, your trigger lines will tell you everything that you need to know. Price is done. The second it hits an area, we're done with price. Price does not factor into clear paths anymore. Trigger lines tell the story. If none of your trigger lines break through that area the same way they didn't break through right here, you have a termination condition. You have an area that could stop the market, that may create a bounce that has the potential to reverse it completely. I do not speak in absolutes when we have termination conditions, because termination conditions break all day long. If they didn't, we would be caught in a range forever. But because the potential to stop, bounce, or reverse completely is there, absolutely no trades into the area. Just assume that you'll lose that trade, because more often than not, you probably will. If two trigger lines get above the area, get below the area, you can say to yourself, all right, that moving average is getting through. It has the potential to break. But guys, if only two lines, both of your small, get above that area, it's not a good look. It's not a good look. It's like playing a 6-number lottery with only 5 numbers, guys. It's okay to not hope that thing breaks with only 2 triggers. But when 3 triggers make it through, now we're leaning on a little potential for the breakout. As long as you have those strong triggers, 3 triggers through is the second trade on your plan. It's a medium probability trend trade because the area still isn't broken. It's only potential. It is not a clear path until all 4 trigger lines get through the area, both small and both large. And once that area breaks, once you get above resistance, resistance behaves as support. Once you get below support, support behaves as resistance. Your path is clear, and your path will remain clear until you reach the next area. So let's go see if there's any truth in terminations. I love this. Weakness, and it reverses before it reaches the area, comes back and retests the support that used to be resistance, pushes up, untradeable bounce, pushes up, full reversal, retests, down straight to support, back to resistance, 2 triggers through, didn't break, untradeable bounce off of resistance, no triggers through 1-to-1s. Good morning, John Novak. Guys, 90% of your day is waiting for advantages. 90% of your day is not trading into areas, not trading without momentum. But there is the easiest trade ever when you have momentum, when you have room to areas. That's a great example, and we'll go look at it when we talk about entries. Guys, you can capture money with those 3 triggers through and the potential to break in between the areas. And you're going to do that with your entry. And your entry is very specific wording. The high probability trend trade entry is so specific that you will buy or sell a pullback at an area inside of triggers. That's the whole mouthful. You will buy or sell a pullback, which means, I've lost my picture. It means that you are going to enter the market when the small crowd fights. This is your pullback. Hey, good morning, Master B. You will do it with such accuracy that you'll wait for the market with a limit order right at an area. Buy or sell a pullback in an area, at a fib, at a mid-band, at a yellow 1-to-1, because the same way those areas on a large chart can stop the trend, they can be the point where the market continues on a smaller, faster chart. But the most important part of this, and I think that this is the language that I really want you to latch onto, you're going to buy or sell a pullback at an area inside of triggers, guys. Inside of, I prefer favorable triggers, where on your small chart, the small and the synthetic, just two sets of large triggers from both time frames. These will define where the market is going to retrace most likely. Price returns to moving averages. This is called regression of the mean for you math people. When price breaks away from large triggers, it tends to pull back. So trigger lines will define the retracement zone. When they are overlapping one on top of each other on that smaller, faster chart, these are favorable triggers. You have the smallest possible retracement zone ever. And then when you put a fib, a midband, or a yellow 1-to-1 in there, you have the least amount of space where the market is most likely to bounce. And guys, this will reduce risk. This will make your risk the smallest that it could possibly be. Risk is not a factor of emotion, but rather a placement where the market should not go. So we're going to buy or sell a pullback at an area inside of favorable large triggers when the large chart rules are true. So when the chart says up, Pete, I'm going to disagree. Pete says the way I described it to yourself is if you have one trigger through, it has a 25% chance of breaking. If you have two triggers through, it has a 50% chance of breaking. Three triggers, 75. And guys, those are fabricated numbers that make Pete feel good about what he does. No offense, Pete. If I have two triggers through, I don't believe that I have a 50% chance. But what it does is Pete uses that concept to say that the odds are not in my favor. And I like that, Pete. I like that you did it. I just don't want anyone to think that if they take a trade with only one trigger through, they're going to win 25% of them, because you're probably going to lose 80 to 90% of them. So when the rules are true on the large chart, when you have momentum, when the path is clear, you're going to see your small chart just railing without you. And that fear of missing out is going to kick in, guys. But don't worry, we're trading patterns. And patterns repeat themselves all day long. And your pattern for entry begins with a reversal bar, with a down bar. Remember, this is not a reversal in the market. This is just a fight, a pullback on a smaller, faster chart. And all of this happens inside of that one bar on the large chart. So when the reversal bar prints, and with a little bit of study long before the reversal bar prints, you're going to define where the retracement is most likely to occur using those large and synthetic triggers. Triggers define the retracement zone. But triggers aren't bouncy. Triggers are like clouds to a skydiver, guys. We want a brick wall to throw something against, and that's going to be an area inside of triggers. Fibs, mid-bands, yellow 1-to-1s. So you will define your entry point using solid areas inside of that retracement zone. Fibs, mid-bands, yellow 1-to-1s. Sometimes you have multiples, guys, and it creates a window. It could bounce from the top. It could bounce from the bottom. So you're going to activate your limit order at the highest point of support, closest to the reversal bar, because you have to remember your large chart is out of control to the upside. It is flying with absolutely nothing in the way, and that is your best of the best, making sure you don't miss that trade, hoping you can reduce risk at a lower area. So this becomes your entry for the highest probability trend trade. Any line, any fib, any midband, any yellow 1-to-1 that is below the trigger lines for a long trade, guys, all the way down here is beyond where the market is most likely to retrace. All the way down here is beyond where the market is most likely to bounce. All the way down here is what I call the wrong side of the triggers, guys. And when you get to the wrong side of the triggers, that's where the advantage of rule number three is no longer in play. Entries are not taken from the wrong side of the triggers. This is where the market should not go. In a short trade, with momentum on the large chart, with a clear path on the large chart, we're going to begin our entry pattern with a reversal bar on the smaller, faster chart. One up bar versus a large chart that says nothing but down with a clear path. At the time of the reversal bar, and even with a little bit of study before it ever prints, you'll know that the market is most likely to retrace to the triggers, somewhere from the bottom line to the top line. And the tighter they are one on top of each other, the smaller that retracement zone becomes. But the market is most likely to bounce at an area inside of triggers. Fibs, midbands, or yellow 1-to-1s. Your job will be to study this pattern, to build the trust, and to activate your limit order just below that lowest point of resistance. And that is where the market is most likely to continue. Guys, this is, if you are following the KISS plan, your best of the best, highest probability trend trade entry. Any area beyond the triggers, on the wrong side of the triggers, on the other side of the retracement zone, on the other side of the areas likely to create a bounce, this is where the market should not go. This is where the advantage of rule number three is lost, guys. This is not where entries come from. Is everybody good with that? Whether it's a short or whether it's a long, guys, we eat off both sides of the buffet. Price returns to the area inside of triggers, we enter. Your initial stop will go about 5 ticks above those triggers. Nanda, are you still in here? We talked about this one yesterday, Nanda. I hope this is helpful. About 5 ticks beyond those trigger lines, where the market shouldn't go, guys, beyond all of your advantages, where you no longer have the edge, that's where I'm willing to lose this trade. 5 ticks below the triggers, beyond the areas inside, that's where I'm willing to lose this trade. True story, guys. With all of the advantages in place, with momentum on the large chart, with a clear path on the large chart, with an unbelievably clearly defined entry, they're going to have to come get me. And what happens very often with new users, and I'm crazy guilty of this one, I'm not going to lie. I want to show you one of the pictures that was very common in my journey. You'll know where your stop belongs before you ever enter the trade, guys. This is the first step in the KISS plan. If I enter at the area inside of favorable large triggers, I have to put my stop. If I really want to be pragmatic and logical, my stop goes 5 ticks beyond where the market shouldn't go. Now this is $150 per contract worth of risk. You're going to have to learn to accept risk, guys. It's a part of day trading, because if you take that stop and you put it inside of the retracement zone, there's a good chance they're going to get you and run, because they may go all the way up to the top. And if you don't want to put that much risk on it and you put your stop behind that fib thinking it's going to be safe inside of those favorable large triggers, it's not uncommon to see new users get stopped out only to have the market do everything that your indicator said it was most likely to do. So when you're working your stops, guys, when you're starting off, your KISS plan helps you define it, helps you know where the market shouldn't go. I would encourage you guys to embrace that until you get so good at reading your indicators that management becomes second nature. So where the market should not go. How do I study this? You don't have to take a trade to study this. You don't have to create the adrenaline to study this. You don't have to. Guys, scroll back on your large chart. When you have momentum, when you have at least 3 triggers through, and this is historical, you can see everything that happened. Don't say, hey, the market went up. Say, hey, the market pulled back to an area inside of triggers. Couple common things that happen. I love this. I love sharing this. The market is trading at 97.05 when your reversal bar finally prints. New users will say, I'm not taking a trade with only $80 worth of profit. That's not worth my time. It's not worth my risk. Has anyone done this as a new user? There's just no room to trouble. Guys, this is the magic of the entry methodology, because when you enter at the area inside of triggers, you've got about $320 per contract. And this becomes huge waiting for that pullback. Other things new users do. Man, there's one-to-ones on the chart. I can't trade into a termination condition. Termination conditions are defined on the large chart. This is a great little bouncy thing to get me back to my wonderful entry. New users will also say, well, my colors don't match. I don't have momentum anymore. I can't take that great entry. And the reality is, momentum is defined on the large chart. So this little loss of momentum is getting you back to your perfect entry. So guys, let the large chart lead the way. Let the large chart lead the way. Hey, do me a favor. Master B, tell me why. Tell me on the chart. Tell me why you did what you did. Tell me what you saw. Because what happens, Master B, and I know that I'm a nag, right? When you guys take the time to annotate a chart, to write on that chart, to say, this is what I saw, this is why I did it. And Master B, if it's everything you could ever hope for in a trade, you have literally written out the recipe for your success. You've made it repeatable. You've made it so that you can study it. And you've put yourself in a position to do the same thing day in and day out because it has an edge. If I'm pretty good at reading charts, I can look at your entries, and I know why. I can read the momentum. My goal is to make sure that you guys can, so that you can be successful long term. So, guys, go back and circle tails on a large chart. You don't even have to be in the market. If you scroll back and you see momentum and at least the potential to break, guys, circle a tail. Does everybody see it? All the momentum, couple triggers through, third was trying to break. What does that tail look like on a smaller, faster chart? It's not that pretty. But it did pull back to resistance right inside of triggers. The same way it did right here, even when the rules weren't met. Right back to a mid-band. Right inside of triggers. With 3 triggers through, this one would have produced a loser, but the pattern is the same. There's your pullback, there's your retracement. We will lose trades, but we're going to make them come get us if we're going to lose it. Let's see what this one looked like. Perfect pullback right to an area inside of triggers. Does everybody see it? That's how you're going to study this. And I promise you, if you go back and watch this, let's do the perfect study. If you go back historically and you take this picture, what you're doing is you're cementing this image in your mind, guys. And if you have your checklist in front of you, if you're looking at your plan, if you're listening in class at all, and you're closing out screen capture on accident, what you're going to realize is that everything you do as a brand new user will go back to momentum. And when you talk about your path, if it's not clear, you may say 3 triggers, potential, be aware, be ready, make sure that everything is good. And then you can say, I had an entry area. And ladies and gentlemen, that's the recipe for a trade. That's the recipe for the good stuff. So if you have everything in play, guys, it is high probability. If you are missing one of them, it's medium probability. And if you look at your chart and you're like, holy crap, I'm missing 2/3 of what's good, it's low probability, and it's okay to not be in that trade. You're in control of the entry. Nobody can make you enter. Nobody can make you exit. Nobody can do anything other than high-five you, I guess, when it's over. But when you know what's working for you and against you, guys, you're going to make decisions. You're going to make them faster. And you're going to see a lot of opportunity outside of the very basics. Are there any questions about the high probability trade? Are there any questions about What's a trigger line? How do I define a termination? What does he mean pull back to an area inside of triggers? You guys feeling pretty good about it? Feeling like we're off to a good start? Cool. So now we're going to go to TradingView. TradingView is still just two charts. Let me pull up my TradingView. TradingView is still two charts. Big chart, little chart, large crowd, small crowd. But TradingView uses minute charts, not Renko charts. And minute charts are slow. I mean, it takes a whole minute, right? So the 15-minute chart is your big chart. It's your large chart. It's your slow-moving chart. It's your broad stroke of a brush. It's going to define key turning points, terminations. It's going to define direction. It's going to show you what the momentum is doing. The large chart leads the way. Your 1-minute chart will define the immediate strength of the market. It will define entry points. Entries are taken from mid bands for trend trades, areas for trend trades, zones, areas, HVA lines for momentum. This is straight out of the TradingView plan. Now, TradingView has one indicator that you're not familiar with. TradingView doesn't have Fibonacci. Programmers are still working, they're not there yet. So there's a company called Chart Prime. There is a fee associated with Chart Prime, worth every penny in my opinion. So rather than Fibonacci, you'll see zones. And on zones, no worries, take your time, Master B. I'm teaching lessons. We won't even look at charts for another 30 minutes. There are zones. Zones can behave as resistance. Zones can behave as support. You'll have them on both large and small charts if you decide to do this. But you'll notice that divergence is the same, that yellow 1-to-1s are the same, mid bands. Guys, it's the same look. So when we talk about the large chart and reading the large chart, there's three things that have to be done to have the highest chance of success. The first thing is you have to be able to identify what direction the triggers are going. It's either up or it's down. And if you are not sure, if maybe they're flat and you're like, well, I don't know if they're up or down, guess what? You can't define direction. How could you look for rules to be met? Let it be decisive. Once you understand up or down, you have to ask yourself, where is the current price? Where is the most current, the in the now price in relationship to those small triggers which are up? And there's three options, guys. If they are left of the triggers, this is the strong side of the triggers. This is the best of the best. When you see it left of the triggers, I want you to say odds favorable momentum. This is the most giddy up you're ever going to have. That's the strong side. If they are to the right of the triggers, that is the weak side. This is where your management hat comes on. This is kind of anything can happen triggers. And then finally, there's the transition, guys. And the transition is when you're literally trading inside of the triggers. Now, here's an important thing. Every position, whether it is strong, whether it is transition, whether it is weak, you're still looking for rules to be met in the direction of the triggers. Are you guys good with that? The relationship of price to those triggers is going to help you with management a little bit. If I'm on the strong side, this is where my 1-minute areas are most likely to break, guys. This is the look where you're going to see people holding for bigger moves. If they are inside of the smalls, that's your transition. I'm going to be aware of areas. I'm going to be ready to manage. I'm probably getting to break even when those areas are reached. And then if I'm on the small side or the weak side, guys, this is where I'm most likely to get paid in an area rather than hoping for the home run. So relationship will help define management. And then finally, path. Is there room to targets? Is there room to get to whatever's in front of me? Do I have enough room to make money, go into that next area? Are there any questions about the large chart read? When you look at TradingView, you'll notice that I've taken off the background colors because the trigger lines are down. And that's all I need to know. I've taken off the large triggers because it's such a slow chart. When these are down, I can define momentum with my relationship. And even on the small chart, I've taken the colors off. I have taken everything off of these charts that is not important to your success. So, what direction? Where is my price? Is there anything in my way? Once you establish that, there's going to be two types of trades you can take that are in the KISS plan as a brand new user. This is the momentum trade, and this is just a picture straight off of the plan, guys. And it's very similar to what we did in NinjaTrader. No terminations or zones reached on the 15-minute chart, which means I have room to trouble. 15 is on the strong side of the triggers, which means that the only way that I'm taking a momentum trade as a brand new user is if price is left of the small triggers. Strong triggers on the 1 minute. So this is where the two platforms kind of cross streams. You have to be able to recognize the separation between the small and the large, because that is mandatory to take a momentum trade. And then once these are true, just a checklist, any pullback to an HVA line or area for entry. And it looks just like this. When the rules are met, price is going to break resistance. Remember, when resistance breaks, it becomes support. As long as there are strong triggers, you will activate a limit order right at that zone, right at an HVA. This becomes your momentum style entry. And what you're saying is that with everything pushing and nothing in the way, I'm hoping that this area holds and the market continues up. It's imperative that smalls are above the large, that you have that strong trigger, that your small triggers have not turned against you to take this trade. That's your first one. I'd say about 20% of your trades will be momentum trades. The most popular trade, the most common trade, will be the trend trade. And the trend trade checklist, 15 minutes, not trading into anything. Clear path, guys. The 1 minute is not trading into anything. Clear path, room to targets. And then you'll just buy or sell a close on the correct side of the small triggers at a 1 minute mid-band zone or area. And your trend trade entries, the most common entry looks like this. When the large chart is up and you're on the strong, weak, or transitional side of the triggers, if the small triggers turn against you on your small chart, you can't take the momentum trade because you no longer have momentum, so you're going to wait for a pullback. You're going to wait for a pullback to a mid-band, to a zone, to an area, and you're not going to enter at that area like you do on NinjaTrader. You're going to wait for an up bar going in the direction of your trade that closes on the correct side of the triggers. When I say the correct side of the triggers, we're going to call it the weak side of the triggers, to the right of the triggers, because this is where the momentum is no longer detrimental, guys. And this is your trend trade entry. Most of your trades will be trend trade entries. Now, to help facilitate the learning, the same way we did it on NinjaTrader, we have it on TradingView. This is the spreadsheet that was dropped in here, and I have to give a thank you to Sword Trader, who sent me a picture of the spreadsheet that he had created for himself to do the same drills to cement these into his mind. So your first tab, and this was a this morning edition. Thank you, Sword Trader. I owe you one. 15-minute trigger strong side. Go take 10 pictures of it. You'll never mess it up. Transition weak side. Guys, burn that look into your mind. It's going to help you with management. Drop pictures of momentum entry longs, momentum entry shorts, trend trades longs, trend trade shorts, and then reaching areas and saying no more trades. I can't trade into this area. Do it for long and shorts. If you go through this process, guys, if you do that chart reading and take those pictures, this is you cementing the foundation. This is you getting those very basics in place. The second one are actual trades, entries, exits, HVA, trend, momentum. A little bit on management, still building it. We're new to TradingView. No more longs, no more shorts. A little something to compare your pictures to. And then finally, there is the trade tracking sheet, guys. I can't stress enough, tracking your trades, studying the next morning, and most importantly, dropping them in the room for feedback. That's what's going to get you where you want to be. That's what's going to take you to the next level. So my promise to you this morning is that I would give you everything that you need. Everything that you need to be successful with the software. You now have rules. Guys, the rules are not a seat of the pants kind of thing. John Novak spent decades building the high probability trend trade rules. We've spent the better part of the last year taking care of the trading view plan, guys. And these rules that we teach, it's all probabilities. We broke 8,000 for the year in pictures, guys. 8,000 pictures of patterns, of entries, of exits, of management. The more pictures you take, the more likely you are to read your charts effectively, to find success quicker. Everybody in the room has the ability to simulate and post in this room. A lot of you won't post in this room because you don't want to be wrong. Guys, be wrong. Because there's nothing that you can do, and I say this from the bottom of my heart. There is nothing that you can do as a brand new trader. There is no mistake that you can make that I haven't already made. And more importantly, that I haven't learned how to fix. So every time you post in the room, guys, I get to be your coach. I get to stand on the sidelines. I get to look at what you do. I get to help you find the success that you so desperately want. Keep it simple as a new user. Keep it focused. Keep it foundational. Keep it blanket rules, black and white, because you will grow from it. And then, guys, study. Study. The software works. I think Ron put that in there very definitively, and Victor backed him. The software works. The software does everything as advertised. You have to learn how to use this tool. If you don't get on the elliptical, you don't lose weight, right? If you don't turn the vacuum cleaner on, the floors don't get clean. If you don't learn how to swing the hammer, how are you going to build a house? It's just a tool, guys. And this tool gives you an edge. And that edge is what's going to take you to the next level. So that's my first hour. That's my first hour every day. Every day. Very basic, very, very foundational. Not at all complicated. It just revolves around advantages. But it will take a little study, right? And it will take a lot of mistakes. Learn how to fix them on Simulator. So if you go back to your charts every time and you say a trade is momentum, path, and entry, you know when it's perfect, don't miss the trade. And Victor said, even after following rules, it went bad. So Victor, let's see what you did. All right. Are you ready, Victor? And thank you for this. This is what we're going to do for the rest of the room. Victor says, triggers down, price on the strong side, clear path to the next trouble, right? Absolutely. Perfect large chart read. Waited for price to be on the correct side of the triggers on the 1 minute chart after they rolled, came in and next bar went against me and took me out. It happens. This is one of those 30%. So Victor, here's the real question. What rule did you break for your trend trade? Victor, you didn't have room to trouble, did you? You traded directly into a zone. There was no room. You had 3 points to get to trouble, $60. And one other thing, your stop belongs above the pivot high for a trend trade because it's not a momentum trade. And Victor, there will be times where you have to say, I'm not willing to enter on a 20-point bar because my risk is too high. But if you had just said, I won't trade directly into something, I will give myself room to targets, it's an avoidable loser. Does that make sense, Victor? Because if you go back to the trend trade, it says very clearly, 1 minute not trading directly into 3 divergences against the trade or zone. Does that make sense? But guys, you don't see that in the moment. Victor saw small triggers down, strong side, nothing in the way. And Victor, you were hopped up and so excited about that short trade that you kept one very important factor out of it. Now, if you'd kept your stop above the pivot, easy peasy, right? But who wants to leave $800 worth of risk on a trade going directly into an area? And what you'll notice, Victor, is that area bounced 1, 2, 3, 4 times before it finally broke. You knew about it. So I love it. I love it when you guys said, I just took the perfect trade and it just didn't work. If you post in the room, I might see something that you didn't see. I might see something that maybe you will see next time because of the conversation that we have. Victor, you are an absolute awesome person for posting a loser in the room. It's terrifying to do that, but it's pretty painless, and he's going to go into his next trade just a little bit smarter. So, guys, I encourage you to stand up and walk away every now and then. I'm going to do that. I'm going to stand up. I'm going to run a lap, and when I come back, we're going to click on every picture that's been posted. We're going to watch the live market, guys. We're going to watch the NASDAQ. We're going to go over to the S&P and ask what our triggers are doing. We'll do it on crude oil. Look at that termination condition holding. Look how it rolled those triggers and prices back below it. And then, guys, we're also going to do it on NinjaTrader. And we're going to do live chart reads. And if the rules are met, if from those very basic KISS plans, there is an opportunity, we will pull the trigger. We'll do it on simulator. We'll talk about management. We'll go through all of it. But I am obligated and bound. I will never, ever, ever pull the trigger if my rules aren't met. And that's what I'm training myself to do as a brand new user. So, guys, go stretch your legs. I'll be back in about 5 minutes. When I come back, we will start looking at pictures. So grab a drink of water, guys. See you in 5. Start looking at the pictures that you guys have posted. Sword Trader, you said you made huge mistakes this morning. No smiles, just humbling lessons. Going to slow back down and do your spreadsheet. Learn the pattern. Thanks for the shout out. I appreciate that you built the spreadsheet. I think it's going to be helpful for a lot of people. Guys, mistakes are cool, but Sword Trader, can I call you out in front of everybody real quick? Respectfully, of course. Why no pictures of the trades you made mistakes on? Right? Why no opportunity for feedback? Why no presenting it so that I can say, hey, Sword Trader, here is exactly where the challenge was. Here's exactly how you fix it. Let's move forward. Let's get that lesson. Let's have that conversation. Because when you do, guys, when you take the time to annotate it out, when you take the time to talk about it, what happens is it starts to stick in your brain. It starts to kind of resonate a little bit louder, and those lessons really begin to cement just a little bit more. I'm going through and clicking on all the links for the pictures, guys. It's funny. I know you all well enough in your charts to typically know whose they are. If I miss a picture, if I don't answer a question, guys, don't let me get away with it. Make sure that you call me out. Make sure that you tell me, hey, Mark, you missed a picture. Hey, Mark, I posted, but you didn't grab it. And I promise you, I will get it. And we're going to go through and we're going to talk about all of these. Victor, you said it ticks you off to go backwards, especially when you see you made the mistake. Just have to learn from it. So, guys, you're going to make mistakes. I can't stress that enough. You're going to make mistakes. But what's going to happen is you're going to get even better at self-diagnosis. And Victor, when you took that trade, were you looking at your checklist? Nope. And guys, that's one of the most common mistakes. Don't give up your checklist. I've got it printed out in front of me, guys. I think I know it. There are no mental plans. Keep it in front of you. And Victor, do you think that if you saw that in front of you as you were ready to take that trade, do you think you still would have taken that trade? You might have, right? You might have made a choice. But you may not have. You might have said, whoa, I should probably let that area clear. And been okay with it. So, guys, I gave you the checklists, and they really are helpful. You get to police yourself before you fall into trouble when you're staring at a checklist. All right, here's Andy. Andy says, check it out, guys. Odds favorable momentum, 3 triggers through, pull back to an area inside of triggers. Let's make money. Andy, man, awesome. I know he's not with us here, but he deserves a shout out. And then Victor asked the question about taking shorts outside of the outer band. And I posted in the room, but I do want to discuss this, guys. There's nothing in the rules, there's nothing in the simple plan that says don't take a short from outside of the outer band. But when you are outside of the outer band, you can assume that the market is trending strong. You can feel like they have pushed way beyond extremes, and they're in Longsville population U. So the answer was, if your rules are met, take the trade, right? But if you're outside of that outer band, realize that you're fighting the giant trend. You're fighting the huge picture. Just put your management hat on. Great question, Victor. All right, Andy. Smalls are up. Up, not strong. So weak side, not strong translates to weak. Path is as clear as it could possibly be. You take the pull back to the area, enter on the close above, and this is textbook, guys. This is one of the prettiest longs you could ever take. You're in at 78. You get paid at 85.25, so you get 125 out of it. And you're protecting yourself behind the one-to-ones. And then you get a pivot up, and then they come back to that mid band, and you let go of 20 bucks. And Andy, this is a beautiful trade. It's a perfect entry. And then I brought a picture in, guys, and I wanted to share it. One of the things that I will throw out is maybe there's a management opportunity in there. And I think that there was. And I wanted to bring this up and let you guys see it, because management's really where the money's made, guys. So with the large chart up, with nothing in the way, if the market pulls back to that mid-band, if the market pulls back to this mid-band, wouldn't you be looking for a trend trade? I think so. So you have to ask yourself, is it worth that $95 to see if the trend trade pans out? Is it worth the $95 to see if it's going to continue with everything that says up? And you'll notice that the large triggers never turn down, which is a great indication that the pressure is still up. And you've already been paid. And guys, management is the second part of the equation. And management is easier with these amazing entries. So Andy got paid, and Andy, I'll take $100 all day long. All day long. 4 times a day, $100. I'm in 6 figures for the year. But as you guys grow and you try to hold a little more, you'll start realizing that it's okay to leave a little risk on a trade when you can identify that bounce point. And it's okay to keep yourself hidden behind the things that should stop it. Andy, it's a beautiful trade, and I know you didn't ask for a management lesson, but I think what happens naturally, kind of organically, is the more time that you spend with the software, the more you begin to see the opportunities for management. So great job, Andy. This one looks familiar. Small triggers down. Price was on the weak side of the small triggers, and there was space to the next trouble area. On the 1-minute chart, guys, look what happens. The small triggers roll. It pulls back to the mid-band, and then there's your close on the correct side of the small triggers. And then, Victor, plenty of room to your first target. And when you get there, probably break even. And they don't give you an opportunity to manage out of this trade. They go directly to the outer band in the mid-band, or in the zone where you take second profits. Absolutely perfect, Victor. Absolutely perfect. And you say, based on the chart, I could have squeezed more profit by moving it down, right? Pushing it down. And Victor, is there anything wrong with a $300 trade? Nothing wrong with a $300 trade. Nothing wrong with exiting at trouble. Absolutely beautiful. And then here's the other thing that I want to say, because I'm kind of warm fuzzy every now and then. Victor, you know what you're doing. You know your rules, right? You know your plan. But you've just proven that even the best traders make mistakes every now and then. So guys, get in the habit of forgiving yourselves the mistakes that you made. Get in the habit, what did I do? There we go. Get in the habit of being okay with not being perfect all the time. Nobody is. Great job, Victor. I deleted somebody's, so if I missed your chart, let me know. This is Cav, and Cav said, check it out, Mark. That fib reversed the market. That's a strong bottom. That's pretty good. I've got strong triggers on this chart. I've got strong triggers on this chart. And because of that termination that reversed the market, because of the momentum, I'm willing to trade directly into Fibonacci resistance. I'm willing to take a shot. I'm willing to give it a go. But I'm going to get out where there's trouble. And Cav did it absolutely beautiful. Because he knew what was working for him, because he knew what was working against him, he was able to take a trade and manage it assertively in case something went wrong. Nicely done. And then, guys, this is chart reading 101. When Cav hit the mid-band in that resistance, his large triggers remained a full bar away. This is what we call the gap theory, guys. And the gap theory states that if you hit something solid and the large triggers don't follow, price is likely to close the gap to those large triggers. It doesn't mean that there's a long trade at the large triggers. It doesn't mean that there's a short trade up top. It just means that you're probably going to get run over if you try to go long before that gap is filled. Cav knows this lesson. He spent time with the software, and when he pulls back to those large triggers, he thinks that he should have been in at the triggers. I think not fighting those small triggers coming off of a termination was absolutely brilliant, and it was an easy way for Cav to get paid. Great job, Cav, if you come in later and listen to this. And then this is Wayne. Wayne, are you with us? Are you back? He said he'd be back at 9:20. I don't know if he made it. We're going to hold off on Wayne's. And then when he comes back, we'll do it. He likes the feedback. This is Pete. Termination, reversal, strong smalls. And you're hoping the fib breaks, right? Awesome, Victor. Because of the momentum, Pete says, I'm going to hope nothing bad happens. And Pete, one thing that I have to point out is that if you had gotten in at the earlier bar at the exact same point, it created a big ugly bounce. You guys that think that a tick or two beyond a fib is a broken fib, at least let the full price bar get away from it to increase the likelihood of success. And I don't know how many of these I see that retrace all the way up and ruin your good time. So, but nice use of momentum, Pete. Strong trending market, nothing in the way. Pete, you jump in, and it hit the termination, and it started down in divergence, but you held anyway, right? Even risk giving some back directly into it. And you did make money. 10. So you're talking about your clear path here at 90, but you're not recognizing that your entry was 13 points later with only 6 ticks to get to something that could stop the market. Not a lot of room there. And sure enough, it created a retracement that probably should have taken you out of that trade. So, guys, every now and then you'll get lucky. I don't mind saying it. But I will tell you, Pete's been with us about 10 years, and he's pretty in tune with the market and has an outstanding plan that suits him. So it's not the wrong trade. But because we are a learning facility, it's my job to point out the challenges with it. Nicely done, Pete. Boaz, one of the most boring traders in the world because everything he does is momentum and path. And then Boaz, it pushes back and you get in on the correct side of the small triggers, which is absolutely brilliant. Do I have any Ninja Trader, NASDAQ traders in here? Do I have anybody that's trading the NASDAQ on Ninja Trader using that 34 and 13 and you can't figure out why the hell you keep getting run over? Anybody? A couple of you? This is for you, guys. Your large chart is a 34.5. Your small chart is a 13.2. These are huge. These small triggers on your small chart are the same small triggers on your large chart everywhere. So one of the things that I realized through blowing out a metric crap ton of accounts is that, guys, if you trade directly into these small triggers, they're likely to absolutely ruin your good time. So there are two entries for you NASDAQ traders. There's the entry where when you get to your areas for continuation, if your small triggers are less than a full bar away, you will have an easier time in that trade if you wait for a close on the correct side of the triggers, because those triggers can act as resistance and support. And Boaz did it expertly here. Where did he go? Expertly. He waits for the close on the correct side of the small triggers at the area that could create a bounce and doesn't get run over. And Boaz, high fives on that entry. Absolutely gorgeous. Do you guys see how the small triggers behaved as a support right there? and it just bounced and continued up. That's kind of the keys to the kingdom for you NASDAQ trend traders. Don't fight those triggers. It's okay to get in a little bit lower. And it's almost the exact same entry. Great job, Boaz. And then the same thing. As price comes up and he's ready for that trade, he says, whoa, small triggers are up. They're not a full bar away. I'll get it on the correct side, on the weak side. And down it goes. Good morning, Wayne. How was yoga? You feeling stretched? All right, let's take a look at this one. The triggers are up. No, the triggers are down. 76, 76. Smalls are down. You do have room to get back to them. Right at a zone, right at 1-to-1s, right at an outer band, right at 3 different things that could stop the market. And Wayne, you go long. Awesome. And you get paid. Amazing. So Wayne, I want you to ask yourself one thing. And you're more in tune with gold than I am. When a termination stops the market, when the triggers roll, when everything is down with those triggers, it almost feels like going short would be the easier path. Wayne says, well, Mark, let me show you something. All of this is really likely to stop the market. And when it starts to get above it, he recognizes the white bar patterns. It's even more likely to stop the market. And Wayne says, well, where's it likely to go if this creates a bounce? Even if it's a bounce to take the next short, right up to trouble. Absolutely beautiful, Wayne. Absolutely beautiful. It's a great chart read, guys. It's outside of what I teach, but Wayne spent so much time studying what I teach that he's seeing the patterns outside of it, and that was great execution. All right, termination gives the reversal, creates momentum. Was it the gap, Wayne? Back to the smalls? Back to the large? You take the first run of momentum down to trouble. Nice. And then it pulls back to the small triggers that are down, to the large triggers, to the area inside. You take the trend trade, and you just ride the trend trade down. Nicely done, Wayne. A couple of really nice trades. Here's the part I want you guys to see, though. Why do we have a plan? Why do we follow rules? 10 minutes, $890, done for the day, going to teach yoga. That should be everybody's goal. That's awesome, Wayne. Nicely done. Saw that one, saw that one, saw Boaz being brilliant. All right, this looks like Miss Jen to me. Upon entry, price on strong side and above pink 1-to-1s. So smalls are up, strong side of the smalls, above the 1-to-1s. You say you took a close on the correct side of the triggers, which is right here, was the bar that closed above. Is that right, Jen? And then we get into the same thing Victor had going on. Just no room. No room at all. And it makes you sweat. Oh my gosh, does it make you sweat? And then it does make it to the next zone. Nicely done. Waited for the zone to clear. There just wasn't a lot of room to the next zone. And were you playing your more likely to break because of the strong side of the triggers card? I like it. For me personally, 2 ticks into a zone. Ugh, that's a lot. 04. Stop was probably all the way down here below the zone at 97-ish. $140 per contract. Great job taking profits at trouble. And then great job not losing anything on that trade when they just absolutely railed off that zone at 02. Nicely done, Jen. Smalls are up. I love it. Strong side of the smalls. So much room. Whose chart is this? This is nice. Market pulls back. Closes on the correct side. First target. Second target. Who was this? I don't recognize the annotations on this chart. Hold on. Wasn't Wayne, wasn't Boaz, wasn't Jen. This was Hunter. Nicely done, Hunter. I love that. So much room. Beautiful. And then the same look, but from the weak side. Close on the correct side. Get paid at trouble. And then you say you realize you did one order instead of two after it hit the target, but that's okay. Broke above the smalls, room to the zone. Rolled down to the zone, weaker side up. Perfect chart reads, perfect execution of the KISS plan, Hunter. 100%. I mean, outstanding. All right, everything is down. Potential to break. So here's what I like. So Master B, can we do two things? Now I believe, and I could be wrong, the circles are my entries weighted for the pullback, right? Are you with me, Master B? So one of the things that is going to be a colossal pain in your ass is my ability to recognize things. So here are your circles. Here are your pullbacks where you said your entries were, but here's your entry at 83.75. So somewhere in here, there's a disconnect between what you think you did and what you actually did. Does that make sense? You actually entered at 83.75, but you told me that you entered at 87.25. And that's a 4-point discrepancy, which is pretty huge. Does that make sense? I see everything. So let's go and take a look and see what you did. That's the area where you wanted to enter. Okay. But not the area where you did enter. So, and Master B, I'm not beating you up. Please understand this, because my job is to help you find long-term success. If you write that you waited for the pullback, your brain believes that you waited for the pullback to the area and then took the perfect trade. If you write that you followed the rules, your brain believes that you followed the rules. But now let's talk about all the greatness, right? That's done. We're done with the annotation lesson, guys. Truth in advertising is really important. So triggers are down, right? I love it. So let's do three things. Let's do three things on this trade. And celebrate every victory that we can find, Master B. And one of the things that I ask you guys to do, especially as a brand new user, is let's go back to these three things on every trade that we take. So momentum. When you entered this trade, smalls below the large, space between the two, life is good. Would you agree that your momentum was rock solid and that's a market that's going to be difficult to stop? Did you recognize that in the moment? Absolutely you did. And now watch this. 3 triggers through trouble. Do you recognize 3 triggers is not a clear path, but rather it's the potential to break. So you might have to put a management hat on a little bit. Does that make sense? Now, one thing that I want to point out is you know where your entry is. And the way you described it with your circles, hey Henry, great to have you. The way you described it with your circles is as follows. And man, we are high-fiving right now, Master B. Pull back to an area inside of triggers. So there's no doubt in my mind that you know where the perfect trade comes from. Fair enough. This is where I celebrate, right? When you're a little new, you don't always get in at that area. Maybe you overthink it. Maybe you're not sure. Maybe you just didn't see it fast enough. And that's totally cool. That's part of being new. But when you got into this trade just a little bit late, isn't it fair to say that the large chart still had all that momentum and the potential to break? And if it did in fact break, isn't that next target the next fib? So you got a late entry on a beautiful trade. And what's going to happen, Master B, is eventually you really will wait for that pullback because you'll know your rules like the back of your hand. I love everything about it. I love the momentum. I love the potential to break. I love the large chart leading the way. The final piece of the puzzle are those great entries, man. And you're on your way because you know the language, right? You know the language. You know that you could have been in at 67 and change and made even more money down to your target. So you took an awesome trade, a lot of money, great advantages, and all you did is you showed me a way to help you do it a little bit better next time. Master B, awesome trade. I hope that was pretty painless. I hope that didn't hurt too bad. Guys, I'll get you on your annotations because your brain doesn't know if you're lying to it. If you tell your brain this is what you did, your brain believes you, guys. Your brain says, this guy's trustworthy. This girl's trustworthy. Believe him. Great job. Oop, that was my picture. Great job on that, though, Master B. All right, that's most of them. Let's take a look. Miss Estefania. One of my favorite names to say. Let's see what you did. Chili Dog here. Everything is down. Everything is down. Everything is down. Decided to hop in when the white bar populated with the HVA line and triggers. All right. So Estefania, 6708, 6708. One of the key elements, and again, I like it. One of the key elements to the chili dog is not trading into areas that could create problems, not trading into areas that could create bounces. Does that make sense, Estefania? So your true chili dog, per the rules, was about right here, with momentum, with tons of room to the next trouble. Do you see that tail right there? And right here, when price hit that area, see how it retraced? And it retraced 76, 79, over 4 points when it hit that area. And when it hit this area, there's a dissection. And when it didn't break this area, it retraced up. And when it hit this area, it retraced up. So, great job. Everything set down and you went down with it, right? But because you're calling it a chili dog, I can't say yes that was. What it really is, and I'm not saying that it's wrong, but what it really is trading directly into trouble and hoping because every indicator is down, it continues down. Now over here, it supports more down as well. Is it wrong? No. But I have to point out the challenges, right? Is it the highest probability trading into terminations without momentum? No. But when every indicator says down, Estefania has been doing this long enough to know that it's likely to go down. And Estefania, one of the beautiful things that you did is with that breakout bar and it opens down below it, that is a beautiful pattern to give you a lot of advantage on that trade. And I really do. I like it. But I just want to make sure that you understand the trouble that you traded into from a management standpoint. Nicely done. I'll celebrate every victory I can find on your charts, guys, I promise. But I'm not afraid to point out challenges. All right, sword trader. Large triggers are down. Smalls are sideways. Above small. Smalls roll. Zones all over. Some room to move. To move up or down, sword trader? Are you talking about a long trade or a short trade? So up. Okay. And so a couple things that'll help me, sword trader. I don't have any idea where this is happening. I don't know if it's happening. Is it happening up here at 24,600? Is it happening all the way down here? Oh, here we go. Here we go. Here we go. So we're right here. Got you. I just found it. Can we do, using the orange lines, can we do the very basic? And let me know. We'll just do it together. Because I know that you're at the beginning, right? Are the smalls up or down? No, they're still down. They look sideways because you're super spread out, but they are very much down. Your triggers aren't up until they pinch and roll. So they're down. And price, I don't know where price was at the time, but it looks like it was either strong or transition. And it looks like you had room to trouble. And short trades are typically going to be the path of least resistance. Now your read was kind of flat, right? So indecisive. Let's look at a couple different things here. Your large triggers are down and your small triggers are down. So give me a Y if you recognize that as strong down. Okay. So again, I don't tell you guys how to trade. But I want you to think of things this way as a brand new user. Making good decisions, right? Having the highest chance of success. If my large chart, smalls are down, and my large chart, large are down, and there's nothing in the way, and my small chart is down, strong is going long, my best chance to win. And only you can answer that question. But what you've done is you have fought strong triggers down below trouble. You have fought strong triggers down. And you decided that because of this red line right here, you're going to go long. Does that make sense? Even on a down bar. So is that going to be your best chance of success? You have to answer your own questions. This is what we call counter trend, fighting everything. And it went up, right? So your brain says, heck yeah, I'm a rock star, and because it went up, right? And you caught a little temporary move up, and you were so focused on fighting everything, you may have missed the giant move down. Counter trend, guys, counter trend is one of the easiest ways to blow out accounts. Counter trend is one of the hardest ways to make money. And the path to financial suicide, written by my brother, One Easy Step. The first one is that they're fighting strong triggers, and you did it on both charts. And the second is you're trading in determination conditions. And it looks like you traded long directly into the VWAP. Because there's your VWAP right there. that has every potential to stop the market. So you kind of hit both chapters in this one trade. But it won, right, sword trader? And your brain only knows the dopamine, that kick, that rush of the win. So when you go back, and I don't know if you actually took this trade, guys, when you go back and you do your study and you're looking at things, don't ask yourself, did it go up from where I decided it should go up, right? Did it go up and make me money? Do yourself the huge favor. Did it follow rules? Because I'm a genius. I am a literal genius in hindsight. Let me show you what I mean. You guys are going to be floored at how smart I am. So, on this particular chart, what I did is, without the momentum, I knew that it was going to retrace. There was no doubt in my mind. I see the tail, and I made $150 on that retracement because I can see that it went down. There must have been a short. And then I said, well, I'm going to get in below everything, and I just rode it all the way up to the high tick, and I made $1,000 here. Not because my rules were met, because I can see the market went up, and that's what I would have done because I'm awesome. And there's no doubt in my mind that I would have reversed right there because it's a couple ticks shy, but I would have gotten out 17 ticks above 1-to-1s because I know that 17 ticks above 1-to-1s is exactly where the market is most likely to bounce. So I probably made another $500 there. And because that's where the market is most likely to bounce, I reversed my position and I took it all the way up, not to the fib, but rather to that divergence line, because that's a loss of momentum, even though that divergence line didn't print till here. And that's where I reversed again. And I took it right there because everybody knows that in between the mid-band and a fib is the perfect spot to get paid. So I made like another $2,000 here. And then I went long and took it back up. And not that that's what you did, sword trader. This is hyperbole, right? To try and help you guys see a lesson. When you go through and you're studying historically, don't ask yourself, what did the market do? Ask yourself, were the rules met? Did I have an edge? Was there an advantage? And what you'll find is that you will stay more focused on the process. You'll stay more focused not on what happened historically, but rather, did you have an edge? Does that make sense, sword trader? And really everyone in the room. It's so easy to say, I would have, right? I would have traded directly into that VWAP. I wouldn't have worried about those 1-to-1s. And the mid-band. I would have held through all of this sideways, and then that's the one that I knew was going to hold. And it's pretty cool though, sword trader, and sometimes it's hard to take that lesson. I know that it is, but I promise you that I've been there, and I've probably been there more often than I like to. And that was one of the things that I had to do, is I had to say to myself, were the rules met? So check this out. If I'm looking historically, does everybody see how the market blew through the mid-band inside of triggers and continued up? And if I'm going through historically, I would say, well, I would never take that trade. What a ridiculous trade. Who takes that trade, right? I'm going to share something with you guys. This is a strong top. This is the perfect look for a market reversal. This is odds favorable momentum. Rule number 1 is met. The mid-band is not a termination in this case. Rule number 2 has been met. And guys, rule number 3 has been met. In the perfect entry look that you could ever take. And guess what? Did anybody take this loser in the S&P? Did anybody enter the market with momentum, clear path, and entry from a strong top and get run the fudge over almost instantly? If you didn't, if you chose not to take that trade, you skipped the high. Is that crude oil? Oh, that is crude oil. Did anybody take that trade in crude oil? So if you didn't take it, you skipped the most perfect trade that you could ever take. You skipped the winningest pattern I've ever taught in this room. Somewhere you allowed your opinion to circumvent the pattern that gives you an edge. And guys, I'm telling you, if you want high probability trend trade results, you don't get to pick. It's either rules met or rules not. And it takes all the pressure off of you. And if you posted this in the room, guys, we would celebrate it. Updated it with BA. I don't know. What's BA, Paul? Switched to an older workspace. Updated it with BA. I'm not sure what that means. So guys, this is a pattern. And I'm going to share it real quick. And I'm going to go to my Nexgen tracking sheet. And I'm going to scroll down to the bottom. And I'm going to add this in there. Even though it's a loser. And I'm going to put, this is your high probability trend trade pattern. And anything that wins 70 to 80% of the time, guys, is obligated to lose 20 to 30% of the time. So I encourage you, when you take a loser, go back to the rules. Were the rules met? Was there an edge? Was there an advantage? Is this a pattern that repeats itself, that wins more than it loses? And if you took this loss, it's a cost of doing business, my friends. It is a cost of doing business. It's paying rent. Good stuff. Good lesson. Sword Trader's like, egads. I didn't sign up for that lesson. I would have taken that trade all day long. I would have lost that trade, Pete, and I wouldn't have even like blinked at it. I would have said, man, they got me. They got me. Those sons of guns. That small crowd ate their Wheaties, and they got me. All right, let's see what you did, Pete. Strong trending market, clear path, and then Pete, right below, and there's your spike, brother. There's your spike. ATM was fouled up and stopped me out a few ticks. Fixed it, re-entered, out at trouble, let it break, true entry below the fib, nicely done. Back out at trouble in a strong trending market. Great, Pete. Great job, Pete. Ninja Trader's giving you fits this morning? I'm sorry. Those are 213. Just build a whole new chart. Build a whole new 5-1. And you had to put the NASDAQ template on there in order to get those, right? When you go to your chart, right-click and go to Data Series. Make sure that it says 5-1 there. Something may have gotten screwy and changed. I don't know. You've probably been on Ninja Trader longer than me and know that's what you did. And it's still defaulted to 13.2? I would be inclined to build it. Okay, that did fix it. Right on. Cool. I was like, I would be inclined to build a brand new chart at that point. All right, live chart read, guys. Crude oil. What do you guys think? Do we have the advantage of momentum? Smalls above large, space between the two, colors match. Can we all agree that the odds are favorable for this market to continue up with this look? That's rule number one met, 100%. Pretty easy, right? That's fast for most people. Now here's where I fell short as a brand new user. Price reached a divergence high. I've got one trigger line through. Is this my best look for a potential break on that divergence high? Probably not. Excuse me, one second. Oh my goodness. Sorry, YouTubers. And look at this. I've only got 2 triggers through on this Fibonacci resistance. Is that my best look? Not so much, guys. They're already below this fib. They're already below the 1-to-1s. Am I going to count on a mid-band to stop a market and create a trend trade directly into a termination, directly into an area with the least likely to break scenario happening? Do you guys see it? Does everybody see how rule number 2 is not even close to being met? Now, if the market goes up from here, who's going to say, I knew that was going to happen? If the market, not following rules, goes up from here, who's going to say, I knew it was going to go up because of that momentum? I knew that area was going to break. I knew that I should have taken that trade at the mid-band. Most of us would, because most of us forgot that we just got the crap kicked out of us on the perfect trade, right? Because great trades will fail. Poor trades will win every now and then to get you to take that bad trade. So my rules aren't met. I don't have a clear path. Oh, right on, Paul. Thank you for that. Don't have a clear path. My background is green, guys. Up or down? What do you think? I want you to see how this works. Uptrend, downtrend. What do you guys think? Green. Can everybody see colors? Can you not see colors? It's up, right? And because it's up, I'm looking for rules to be met for high probability trend trades long. That's my path of least resistance. Does everybody remember that the only way you can have strong triggers in an uptrend is if the colors match? Did you guys pay attention to that part of class? So, do I have momentum? I don't. No, I don't. My triggers are red. And they're actually both down, right? But my trend is up. Do you see the conflict? I've got 2 triggers below a divergence low. I've got 2 triggers above. I don't even have the potential to break something for an uptrend. Everything here's pointing down. There's just nothing to do, guys. It's just a sit on your hands chart. All right, here's our crude oil read over here. Let's do it together. It's all sit on your hands. That's all it is, right, Pete? 90% of the day. All right, guys, let's do this read together. I'm doing it here because I want to make sure nothing changes. Are the small triggers up or down, my friends? What do you see? Tell me what you see. Don't be afraid to be wrong. And I know who's on TradingView. So, guys, if you're not participating, you're doing yourself a disservice. They're up. All right. Am I strong side? Which means that most current price right here, 64.19, right there. Am I strong side? Am I in that transition? Or am I weak? So I'm going to show you a trick, sword trader. There is an extension of those small triggers off into the universe. If you are inside, Pablo got it. Pablo corrected. If part of your bar is inside of those triggers, guys, you're in transition. Just be cool with it. I'm in transition. It doesn't mean I'm not looking for a long trade. It doesn't mean I can't take a long trade. Not the close. Not the close. Great question. The most current price. Where is price right now? And now it's up above and strong. But back here, it was transition. It was weak. That's why I take it. And then the final question is, was there room? Is there room to get to that zone that could stop the market. That same zone that's already stopped it 3 times. Do you have any room up? What do you guys think? Is there room to trouble? There's none, right? So I don't care about this chart. I need a clear path. And that's it. Boom. Done. Sit on your hands. Take the picture again. Triggers are still up. Now we're strong side of the triggers based on that. But does everybody see that there's still just no room? There's just no room. So once again, don't care about my small chart. I'm going to sit on my hands. I'm going to do nothing. And then what's cool is that little voice in the back of my head is saying, if this mofo breaks up, I'll be ready. I'll be ready to look for a trade. If I can get above this trouble, I'll be ready to look for a trade. But until that happens, I'm very content doing absolutely nothing. Now here's a little trick that I like to use. I'll put a trend line at the top of trouble, and I will say the only way I'll take a trade is if my entry is north of the top of that zone, which means that I can't trade into a zone right here, right? There's no room. So what needs to happen? What I really need to see, if long trades are really going to set up, guys, I need this market to push up over here. I need to break this area here, and then I need to pull back to it. All of that has to happen per my rules before I can find a long entry. Does that make sense? It's 10:55 a.m. We'll see if that happens, what time it comes to fruition, guys. NASDAQ, up or down, guys? Up or down? Down. All right. Here's my most current bar at 2450. Am I strong? Am I transition? Am I weak? I'm weak. See how I'm right of the trigger, sword trader? The only place that could be transition is if I am literally inside of those triggers. And I'm all the way up here. I'm weak. Does that make sense? Perfect. Now, and then who said it? Sword trader, you said it. You're inside of that zone, right? You're inside of the zone, which means you are in a glass case of emotion, my friends. You have nowhere to go up. You have nowhere to go down. So if you don't know if it's going to go up or down, if you're not in the best momentum, and hell, look at that. You've got zones surrounding you here. Many blessings to you, Miss Cindy. Just wait. Perfect answer, sword trader. Perfect answer. 90% of your day is doing nothing. 90% of your day is sitting on your hands. 90% of your day is just relaxing, kicking back. Look what crude oil is starting to do. Triggers are up. They have problems every day, Boaz. I'm the strong side of the triggers. I'm breaking above trouble. And guys, what we called 5 minutes ago is starting to happen, isn't it? They're breaking above what used to be resistance, and now it looks like support. I'm getting momentum to the upside. Hell, we might even get an entry. So what are your entry rules? My entry rules say, with strong triggers, here we go. When it breaks away and pulls back, my first shot, ooh, 10 is a lot. My first shot would be a snap back to the zone to try to ride that momentum. Does that make sense, everybody? That would be my first shot. And my stop would go a couple ticks below that zone. Momentum trades fail all the time, guys. This is about 20% of your trades. And what you're hoping is that all that momentum pushes the market up. That's all it is you're hoping that the momentum pushes it up. Outer bands are great targets. Does it make sense? This is the only time you will enter on a pullback to the area. This is the only time that taking that snapback is your entry. Once that bar prints, I'm going to be tick or two below it. And I'm just going to hope it goes to the next target. Guys, this is your momentum trade entry. We didn't trade into the area. We let the area break. We're trading with momentum. We're trading with the snapback. I don't know if this is going to win or lose, but it fits my rules. It fits my plan. And if momentum is going to carry that market, outstanding. I'll take that winner. And if it fails and my small triggers roll, my mid-band is below back in that zone. So this is really my only option, is that momentum trade. Because if this momentum trade fails, guys, if I take that $120 loser, and I'll tell you what, it's pretty freaking outstanding to have $30 risk on a trade. It's pretty outstanding to be risking $30 per contract on a trade because of the accuracy of the entry. I'm not going to move my stop yet because my rules are still met for a momentum trade, even if it pulls back. I'm in. I'm committed. Are there any questions about this one? I told you guys I would pull the trigger if the rules were met. The rules were met. I can compare this to my checklist. I did. It's right there. That's what the orange is. That's my stop loss. My stop loss is below the area that I'm hoping. Of course I do. I always trade with stops. This is paper trading. Sword trader, trading without stops is like trading, it's like high wire over the Grand Canyon, right? Why would you leave yourself that vulnerable when you know where the market shouldn't go if this trade is going to succeed? If this trade is going to be a winner, it shouldn't get down here a couple ticks below that zone. So, if they get below there, they got me. I lost. I'm cool with that. Because with momentum, with a clear path, with a pullback to the area inside of triggers, this market's more likely to go up than down, right? And as that mid-band goes up, hell, I can even put it out a little further. And now this is where management comes in, guys. This is where you might say, I'm halfway to my target, right? I'll take 2 off. I'll take $100. I'll go break even. Now I have $100 in the bank. I've got absolutely nothing to lose. I've still got room to targets. And it's all based off of one rules-based entry. How do you guys feel about that? Getting paid halfway there, making $100, nothing to lose? All the momentum up? Heck, you could even say, I'll put it behind that one that pulled back and retested. I've already made $100. I'm willing to risk 20 of that 100. I'll walk away with this with $80 because I've got room to targets based on momentum, based on the strong side, based on the clear path. And guys, this is what I teach every morning. And if you're scratching your head, wondering why the entry was here, and if you're scratching your head, wondering why I got paid on half of them, guys, ask the question. Force me to answer it. There we go. Bingo is what we call that, guys. Straight to the target. We took $220 on the second contract. You made $100 on the first contract. No, we made $120 on the second. I don't know. Nope, that was a $220 trade. That was live. That wasn't handpicked. Now here's the important part. All right. Whoops. Here's the important part. And guys, I see somebody is absolutely blowing up my Discord. Please don't get your feelings hurt that I don't answer you when I'm in class. I'll get you after, I promise. All right, so Sword Trader and everybody in the room on TradingView, Lost NPC, Hunter, all of you guys, can we all agree that there were no terminations or zones on the 15-minute chart? Can we agree that the 15 was on the strong side of the triggers and that the 1 minute had strong triggers, odds favorable momentum? All right. Can we agree that we bought a pullback right to the top of the zone for the entry? As soon as you know your rules, you will never hesitate. As soon as you know your rules like the back of your hand, you won't start saying, oh, but, egads, I don't know, how come? You'll say, holy shit, I have to take this trade because it fits my rules. If you don't know your rules, pardon my French, you will hesitate. You will miss these trades. And you'll say things like, man, the software's no good, right? The software's no good. This plan doesn't work. Guys, this plan is like a diet. If you follow it, it works. As soon as you start eating Cheetos, things change for you. I love it when we do it live. Pete, no room, right? Not even medium probability. All the momentum. Great entries make manageable trades. Oh yeah, no, don't be worried, Sword. Don't be sorry, please. Send them all, guys. Message me all day long, please. I will get back to them. I've got a little bit of OCD, so when I see that 9, my guts want to answer it instantly, and I just want to let you guys know that I won't answer it during class. Pete says, you know what, Mark? Check it out. I can take this entry right at the area, right inside of triggers. It gives me some room to get back to trouble. I can protect my investment. It's a very low risk trade. And Pete says with that much momentum, it's worth taking. Pete, this is a great chart read. And I'll add to what Pete didn't say. Odds favorable momentum on the small chart. No divergence on the small chart. No indication on a smaller, faster chart that the market didn't want to continue up. Every indicator set up. He just had one stupid line to contend with, and he gets paid and eliminates risk as he heads into that. Beautiful. Nicely done, Pete. For you new users, trading in determination conditions sure feels like a bad idea. It's still going, guys. Is anyone bummed about their $220? Anybody sad about their $220 if that's all you made? I mean, we did it live, right? I'll take it. And Pete, every chart says up, and you don't have anything in the way until 67. We'll see if they get there, just for grins. We'll come back and check it. It didn't go up, did it, guys? It didn't go up with that green background. I'm so hyper conservative on that thing. right, so there's Pete's entry. Does everybody see odds favorable momentum? What do you guys think? Do you see it? Does everybody see 3 triggers through? It's right there, but we're good. 3 triggers through. Guys, watch how you can call your shots. If I got a reversal bar right now, the market is most likely to retrace somewhere between these 2 sets of triggers. The market is most likely to bounce at the areas inside of those triggers. And if I decide I want to take a trend trade, guys, before the reversal bar even prints, I can be waiting for that market at 27. I can be waiting for that pullback. I can be waiting for that reversal bar in my attempt to take this medium probability trend trade. Does that make sense? I've called my shot. And I've used the language. The market is most likely to retrace somewhere inside of the triggers. The market is most likely to bounce. We'll use the circle. At the areas inside of triggers. Do you see how language creates the definition? Language calls the shot. Knowing your rules, guys, you can't not know where it's coming from if you know your rules. Now let me show you what happens. I'm going to show you exactly what happens. I've got a great picture because I have a lot of pictures. Let me go to classroom, chart reading, entries. Almost there. Almost there. There we go. I'm going to show you what's pretty normal for people. When you focus on the money instead of the pattern, I see a lot of you guys take this entry right here. Number 1, oh my gosh, it's going without me. How am I ever going to get paid? I better jump into the market trade. Has anyone ever taken this trade and almost instantly it turns against you? It's like they know, like they have cameras. Nothing worse than buying the high tick, guys. If your stop is where the market shouldn't go, you have an enormous amount of risk with this entry. If you only have 5 ticks, you have virtually no room. This is a common entry among new traders. This is the fear of missing out entry. The second entry is when you don't get your entry and it looks like they're running without you. I see a lot of people take that right at the top tick of that bar that never even became an up bar. And all you've done is increase risk. And all you've done is decreased profit potential. And then finally, you learn, you trust, you wait for the pullback at the area inside of triggers. And you have the least amount of risk. And you have the highest room for profit. And guys, until you know and trust your rules, you will fall victim to the first 2. This trade keeps getting better and better and better. And all I want in life is a pullback to an area inside of triggers. All I want is a pullback somewhere in that window of opportunity. Give me the chance to go with this market. You will call your shots, guys. It's a lot of fun to call your shots too. I'm not gonna lie. You kind of feel like a bad mother sucker. Now Pete's holding for the big one, right? Pete's holding to go all the way up to the distance. Pete's like, with all this momentum, what a great runner. Pete's going to be forced with a decision. So Pete, I'm not telling you how to manage your trade, but one of the things new users will have to go through is, with this look, does it make sense to exit the position right here on the way down to the area inside of triggers? Does it make sense to exit right at an area inside of triggers? No, that's a pretty big move. Pete says, you know what? I'm willing to exit with a little loss of momentum, and I'll just re-enter. And you would re-enter there. And I know how you work. Pete says, my job is to get paid. I'd rather put money in the bank and wait for the next trade because I know that the next trade is coming. Andy, all the momentum, right? But your entry is at 88. Your entry is right here. No, that's 68, sorry. So Andy, 3 triggers through, all the momentum. It wanted to go for a second. Andy, can I give you my 2 cents on this one? Beautiful look, especially for the NASDAQ. Beautiful look. Andy, one of the things that I noticed on the NASDAQ, and one of the ways that I lost a lot of money on the NASDAQ, was fighting the small triggers on the 13.2. And this is a pretty good example. Do you see how when price pulled away from those small triggers and they were still down and a full bar away, it closed the gap? Very much like the gap theory on the large chart. Because remember, these are 13.2s. So if I get to my area for entry, and Andy, your mid-band's on the wrong side, which is a big red flag. But if I get to this mid-band, and I'm thinking I want to go short with those large chart advantages, if your small triggers are less than a full bar away, Andy, if they are less than a full bar away, they're more likely to behave as support, exactly like they did right there. Does that make sense? Your large chart read is so great. I'm going to give you a little patience piece that's going to keep you from getting run over the way you just got run over. And I'll show you. Let me pull out the spreadsheet. And Andy, I had to take this loser about 75 times before I finally figured out what pattern it was. You can hear me talking? So let me give you this picture. I know, but repetition, right? Repetition. Andy, when your large chart is beautiful, man, it's hard to not want to get in the market. When they're too close, close on the correct side. When they're full bar, use the area. Absolutely, Robert. We'll do it together. And Andy, this saved me so much money. And I can't stress enough, your chart read is so great over here. You'd be crazy to not look for a short trade, right? Be insane not to look for a short trade. One of the challenges, though, is you're using a large chart without synthetics. So you did have a fib at 72, which puts this even a little more medium probability. Only 2 triggers through the fib and divergence prints. So it compounds a little bit. If you're not using that automated system, man, and you're really doing it and you want the highest chance, get your synthetics over on that large chart. It'll help a lot. One more picture and then we'll do it together. Robert Mark. The sentences are so close together you can't get the big picture. Okay. Thank you for that. Thank you for that, Andy. Most people won't say that. All right, are you ready? So let me take your picture. And I'll even use your arrow. If the small triggers are less than a full bar away, and let me just do it this way, above the reversal bar marker, I will wait for a close on the correct side of the small triggers. So that is a lot of noise sometimes. So let me give this one back to you, Andy. Does that help? Does that make it easier without all that nonsense that I wrote on the other one? Cool. I'll do this for you every time, I promise. Whoops, I posted the wrong one in there. Let me share this. So guys, if you ever need anything like that, if you ever need me to clean it up a little bit, and I know that charts get busy sometimes, just tell me, and I promise you we'll do it, because what a great study tool. And great stuff, Andy. Your large chart read was beautiful. All right, Miss Jen. Smalls are down. Weak side of the smalls, 32. Right? You get the pullback. You get the close below. And there's just nowhere to go. Great chart read, Miss Jen. Great chart read. No, there is no should, Andy. There is no should have learned. Remember when you were a new nurse and that old crotchety lady said, you should have known that. I've heard stories. My wife's a nurse. You shouldn't have known that. You didn't have time in the seat. We know who she is, right? We know who that nurse is. But there's no reason, Andy. There's no reason for you to have that stored in the database. You're brand new. We heard year one, you guys know this. Yeah. Respectfully, that's poppycock. All right, are you ready, Robert Mark? Bum, bum, bum. Are you working with Snagit? I want to make sure. Okay, cool. So let's go start to finish. So I'm going to take a picture, and it's going to bring it up here. So we want to share the link first. This will be the first step. Do you have yours default to go to screencast? I do. I made mine the default to screencast. So even if you don't, come down to the list and click screencast and just share it. Okay. So see where it says, let me let it finish doing what it's doing here. See where it says share link? This is what gives us the web address so that we can go back and click on the link. So for example, this screencast link that Pete gave us in the room, it's because Pete said, well, I want to share that link and I want to share it to screencast. And when you sign up for Snagit, you're already there. So share it to screencast. And then what it's going to do is it's going to give you a link to that picture. It's going to throw it in the cloud. And here, hold on. And I'll just show you real quick. So now you guys can see into the chat box here. So Robert Mark, when I click share, look in the bottom right-hand corner of my screen that you can see. It's going to tell me that the file is shared to screencast. And that puts it onto my clipboard. Does that make sense? So far, so good? Let me get back to my main screen. Cool. So once it's on there, I can paste it in the room. There's the picture. But what we're going to do, we're going to say that was the perfect trade, right? That was the one. That's the one that I want to put in my plan. Maybe that's the one that I took and I'm getting feedback. But let's go through the process. So you can right click and paste that link into the spreadsheet. And let me just, for grins, see if I can make this bigger. So just so that you can see it there in the room. So HTTPS, app, screencast.com, letters, numbers. So that's the link that they gave me. This is a mess, Robert Mark. I don't want to look at this. What I want to do is I want to be able to see perfect long, right? Or perfect short. So I'm going to go to the Insert tab. And from the Insert tab, I'm going to go to this link button right here. And I'm going to insert a link. And what that's going to do for me is it's going to let me take all of that jumbled mess. I'll repaste it into the address. Same way you were going to Google or eBay or something like that. And under text to display, I'm going to call it the perfect long. And then when I hit enter, now I've got this easy to read. I know exactly what I'm looking at. So if you're going through and you are doing strong triggers, you can do them all strong triggers or do them all weak triggers. And then in the trade tracking section right here, Robert, on this spreadsheet, let me drop it into the room. No worries. There's the actual process right there. Pasting into the spreadsheet part 1, showing you that you'll right click, paste it in, go to the insert tab, set up a hyperlink, and then right in the spreadsheet as well is part 2, where you have to readjust the text and then click OK. So try it a couple times. And guys, let me know if you get stuck, because this is one of the greatest things. And do you guys want to know a secret? Can I let you in on a harsh truth? My spreadsheet, for the first 1,000 pictures that I put into it, literally for the first 1,000 pictures that I put into it, looked like this right here. Because I never learned that trick, and it was a mess. And guys, it still works. You can still click that link, but you have to hold down Control to make it work. Have to hit Enter to set it. So you can still do it, but that one's easier, and you can click the direct hyperlink. And then Robert, Mark, let me know if you have any challenges with that. And Jen, great patience on that one, by the way. Great patience without room to the target. It's so hard sometimes to say, I think it's going to do this, but my rules aren't met. I choose to do nothing. So great job, and you're welcome. And guys, this is what the room is for, right? Pete, still odds favorable, 3 triggers through. He'll exit here, and he'll look for the re-entry. Perfect. Absolutely perfect. Miss Jen, tails in the zone, weak side. It's cool to do nothing, right? The zone is causing shenanigans. I love that word. What does it cost to not be in a trade? Doesn't cost a thing, right? Sometimes not being a trade is the most money you'll ever make. Man, it pulled right back to the areas inside of triggers and started bouncing up. How crazy is that? You guys knew where it was most likely to bounce. That's exactly where it bounced. I must be psychic. Nothing to do. Jen, your zone did finally break. We're below it. Smalls are still down. They haven't rolled up. We'll know at the end of this bar whether they want to be up or down. So if you took the pullback and the close below, you didn't really have anywhere to go, which makes it a little difficult. Guys, I'm going to take 2 minutes. When I come back, it's your classroom. Tell me what we're going to talk about. I'll be back in just a second. I've got 50 of you in here. And I love that. I love that. Today you understand my pictures? I like it. There is a lot going on. There's a lot of the time. You have a supply and demand area on my 15-minute chart for NASDAQ. You don't have that. How do I know I have the right chart loaded? Let's try this, Victor. So anytime I feel like my zones aren't what they need to be, anytime I feel like my zones are lining up with what I see, I'll go through and I'll go to the instructions from the page here, and I will go here and I will I'll go ahead and reload a new NASDAQ. So I'll click on that one and I'll take a look and see what John's zones look like. And that's pretty much the right view. Hey, Henry. Good to see you in here. And this one doesn't have any zones either, does it, Victor? Okay. So it could be me. So watch this. I'll click on my charts and I'll hit F5. And I'm going to reload those charts and let them kind of recalculate. And I've still got one. And that's paper trading. Is that NASDAQ? That is. Let me see if I get out of paper trading. And go to AMP and recalculate. Alright, so what's another way we can do it? And Jen does have the zone. Are you on... Guys, there could be like a subtle little difference in tick data. You could take it, Victor, and get rid of it. And then go back to your indicators and put it back on. And mine still shows up. Did you do the reload? Cool. So the reload has no zone. So mine has a zone. Would it make you feel better? Hold on. Guys, you have to trade your charts. I can't stress that enough. You have to trade your charts. So I'm going to take it. I'm going to copy it. I'm going to save it. And I'm going to reload it. Now open it anyway. All right. Does that feel better? I do too. I hate reloading my market flow chart. But now I don't have the zone, right? I wonder why. I don't see any zones on there. I'll delete it. I'll add it. See if anything shows up. Got some trend lines. Yeah, John, we already did all that. We already did all that. So Victor, let's try this. Just for grins. I guess so. I don't know what the Mac equivalent is. So there's the reload. We'll try that. Uh-oh, John's going to throw some smart stuff. Scroll up big time for days. We are past all the zones. Well, John, I had one on my chart right here. There they are. But I had one on my chart. So, Victor, I'm going to try this one. I'm going to click on the minimal one that I give in the room. And it has the zone. So maybe it's a byproduct of trigger lines, maybe? You guys with large triggers? Maybe I'm on the different contract too. I'm on NASDAQ Z25. John's on the continuous. I rolled mine to be consistent with the classroom. So there you go. Put what back? I like my minimalist look. John says I have to go to the continuous, so I'll go to NASDAQ. Is that it? That's the old one. So we had different symbols, Victor. That's why. I rolled mine manually to get to the December contract. Because the December contract, I was trying to be consistent with my charts in the room that were rolled for the room. There we go. We got to the bottom of it. We got to the bottom of it. But watch this. So let's open this one. I want to save it. Make a copy. I'm going to say NASDAQ minimal. And then I'm going to come back to this one and I'm going to drop that NASDAQ minimal in there so that it looks exactly like it's supposed to look. And then I'm going to take this chart and I'm going to put it on the continuous contract, and I'll take this chart and put it on the continuous contract. And ta-da, Victor, we match, brother. There you go. I just wasn't in the continuous contract. I rolled mine over so that I could try to make the same price as I had on NinjaTrader. We learned something today. Made that a much better looking short, didn't it? Good stuff, guys. And then Sword Trader, you said that was one of the questions that you sent me. So do me a favor. Ask those in the room, Sword Trader. Don't send me questions. Like, don't do that private. Get it out here. Let everybody learn. So what I did, guys, is this is watch list. Like, these are great lessons for everybody. And you come up with some awesome questions. And there's people that are wondering. So right here is the watch list. And these are the old contracts, the new contracts. So if you're in the continuous contract, it will roll itself. It'll go from September to December when the volume increases on December. And that's how the workspaces are set up, guys, like that. I changed it. So what I did is I hit this plus button, and when I put in the NASDAQ, because I had rolled my NinjaTrader and I wanted to be consistent for this classroom, I used the drop down menu and I went to the December contract. And Victor, that's why you and I have different supply and demands. Sword Trader, that's why you and I had different supply and demands. So I've put it back on the continuous contract. Thank you, John Novak, for the heads up. But that's one of the cool things about TradingView, guys. It'll just roll it for you when it's time. Great lessons. Great lessons. Uh-oh. John Novak took a trade. So, John, you went short and you exited at trouble. And it happens to line up with trend lines too. Pretty cool. Life is a learning event that never ends. Amen. And you can't have a bad day teaching. I firmly believe that. I had a mentor teach me that. Guys, look what John Novak did. He had strong triggers. He had a clear path. He had room to trouble. And he took a trade down to trouble. System took a small loss. Odds favorable momentum. It looks like 4 triggers through, right, John? The perfect look. Do you guys remember when we looked at crude oil earlier and it was the perfect look and it lost? The bastards do not always do right. Guys, you're going to lose trades. It's part of it. It's hard to get past the idea that it's okay to lose trades. The system that takes the most beautiful trade entries ever lost a trade. And then John found it. They usually give a second chance. The apology trades. Everything says down, guys. That market just continues to go down. Pete, look at it. Divergence kept you from entering at the mid-band. You get in on a reversal bar. You still make money. You're still break even. Beautiful, Pete. Does everyone remember when we were looking at crude oil and before we ever got a reversal bar, we said we know exactly where that market is most likely to bounce and continue with all of that momentum? Were you guys here for that? Guys, if you're a NinjaTrader user, I can't stress enough, if you just learn your rules, it's not difficult. If you just learn your rules, that very base core. Ooh, you got a fib update, Miss Kathy. You're in a different time zone, my dear. So your computer is set to Central Time Zone, right? Yeah, which means, so, John, he spelled it like a girl sheep too. So Miss Kathy, I'm going to give you a cool little lesson on where fibs come from. Because this is neat. I think it's neat. And John, close your ears. I had no idea my brother was this smart when we were growing up. So when you open your software, John, don't you dare answer the question in the chat box. I will fly to Sarasota. No one knew. When you open your software, Miss Kathy, it goes back 10 days. And it measures every swing, every up and every down. And on that 10th day, your midnight is 1 hour after the midnight in Eastern, which means that you have an hour's worth of up and downs on your big chart, your little chart, synthetic time frames, and that one little ripple in the matrix being an hour behind me is going to give you different fibs. And if you want to be consistent, Eastern time frame takes care of that. But as long as you're in a different time frame, we will probably never have the same fibs completely. Because yours did a 10 a.m. update. Mine did it an hour ago. That's what you get for living in Louisiana. Oh, you're in Texas? Where in Texas are you? Now I'm just jealous. East Texas, I love it. Out with the hardwood and the pines. I'm excited to get back to Texas. We got another month and a half. But that's why you had the fib. And that's why it didn't show on mine. And that's why you didn't take that trade. It was just a time zone issue. And then John speaking in tongues. 9 plus 9 is 18. 9 plus 8 never will be. So San Antonio. Paul, you don't need it. For TradingView, Paul, all you need is the continuous contract. The NQ exclamation point. It'll roll itself. John, you didn't have it, did you? You didn't even show it. No. Paul, you can find it under the watch list by add symbol, and under the NASDAQ, if you do the drop down, Paul, you'll see that NZZ December contract. You don't need it though. All you need is the continuous contract, the NQ, and it'll automatically roll for you. At this pullback, there were only 2 triggers through. Pulls back, waited for it to print on the correct side of the small triggers, took it down to your target. And then Andy, the only thing, beautiful, just a little late, right? Could have been up here at the close on the correct side. And the NASDAQ moves fast, and that may have just been too quick to get you in. But it's perfect. And you took that lesson, Andy, and you applied it instantly. And made $100. Nicely done. But remember, it's the close on the correct side. It's not the close on the correct side and then 7 bars to confirm it. Room to targets, great. Good job, Andy. Smalls are down. Weak side of the smalls. Pulled back to the mid-band in the zone. My rules say a close on the correct side of the small triggers. Do you guys see it? Hasn't happened yet. We have 51 seconds. I don't know, Victor. Did I talk about it? Did I miss it? Where was it? Would you repost it? I don't see it. 3 posts up. Oh, so you clicked on your 1 minute and it's the NQZ, and then you clicked on your 15 minute and it's the regular. Guys, give me just 1 second. Just 1 second. That's why you lost it. That's it. So what you need to do is open up your watch list and make sure that you're on that NASDAQ. And when you click on your 1 minute, Victor, click on this and it'll change it from your watch list. Does that make sense? So whatever symbol you want on your 15, you can click it from the watch list. See the ribbon right there? Looks like a bookmark almost. Open it up. Did that work for you? Did it populate or not? Do you have this? If you don't have this, let me know. You're going to click your plus button. And from your plus button, you'll click on this bad boy. And it'll put it in there for you. And then once that's in there, you can just click on the chart and go back and forth. Let me know if that worked for you. These are like the little things that you find out later in life. You're like, oh, I didn't know I needed that. And it turns out that's not a bad thing to know. Did I get all the pictures? Did I catch all the pictures? I think I did. Pete, I got you, right? Yep, nicely done, Pete. Why do we wait for room to targets? Because zones create bounces.